It's the 10 Mil Club's weekly portfolio video for the second week of July, 2026.
From the South Carolina Low Country.
It's the 10 Mil Club. It's the 10 Mil Club.
The 10 Mil Club is an informal group of people who believe that if we could get to $10 million of net wealth, we'd have the financial freedom we really desire. The market this week is still going through a rotation of sorts. This is the VIX. Kind of probably best to start with it. We know that there's an 80% negative correlation between the VIX and the S&P 500, because the S&P 500 is the kind of the largest index. Followed the VIX is the volatility index for S&P 500 futures. Anything above 20 is considered to be an alarm. We're at 18.77 as of the close on Friday. The VIX has been, even this week, as below 16. Friday was option expiration day. Sometimes that matters, sometimes it doesn't. You'll see some odd lurches of stocks one way or the other. And, I think honestly we saw a little bit of the effect, but not kind of roundly. The percentage of S&P 500 companies trading above the 200-day moving average, this is 1 year of it, we're at almost 66%, with a little back off on Friday. That's pretty high. We're looking at this year here. That's actually pretty high. Honestly, we're probably looking for some sort of back off here pretty quick. This is S&P 500 companies trading above their 50-day moving average. You can actually already see somewhat of a back off here. Now, if you watch Dave Keller and hang on his every word as we do here at the TMC, Dave Keller's market misbehavior, we like to think of ourselves as the Dave Keller after party or late show for Dave Keller, if there is such a thing. They teach this in the CFA program, they teach it in the CMT program, and really it's kind of just common knowledge. But there is a group, and Dave Keller pointed this out the other day, there is a group of money managers who are required to keep their money 100% invested in the stock market at all times. What that means is that they have to rotate from some things to other things. We know right now that we have a new head of the Fed. It's likely that interest rates are going to be going up in the future, and that statement, as blithe as it is, there's a lot to unpack there. But we know that interest rates, cost of capital in general, is probably going to go up in the not so distant future. When that happens, tech and everything associated with it, semiconductors, AI, all of those things have because they are pretty much all cash hungry and do not have any, routinely most of them don't have any real income or positive cash flow right now, and their rewards are pretty far out in the future. Because that's the case, a small rise in the cost of capital or interest rates will affect them a lot because their results are way out in the future. And so that money has to rotate somewhere. You would think that that money would rotate out of fixed income, and in some cases it has. But what we've seen, and we're not going to cover that in this particular show, but a lot of REITs and things that are associated with REITs, real estate in general, have actually seen a rise in those stocks. We don't really go over this in this particular video. Maybe we should start doing so. But we actually invest in a lot of fixed income here in our group because, honestly, fixed income is our first love. Being able to invest and being paid for it is just fantastic. And so, but what we're seeing is this odd rotation right now where you'd think that things that were more fixed income like real estate would go down, and in some cases they are. Some preferred shares and things, bonds are doing that, but REITs themselves, like their common shares, are kind of going up. Many of them, not all. We actually sold a block of common shares in a REIT this week. It was kind of a surprise to us because it wasn't a REIT that has increasing funds from operations or adjusted funds from operations over time. We kind of thought it was an okay REIT at best, but it went up to a saleable spot, and we just kind of took it. That's kind of a final note before we go to looking at individual stocks, though. The MOVE index is kind of the VIX for bonds. At least I believe it's the volatility index for bond futures, not showing anything that would indicate a market that considers right now to be excessively risky. So large amounts of stocks selling above their 50 and 200-day moving averages. We know of a rotation into more defensive names, but as of yet, the entire market isn't really getting killed. We're seeing low measures of volatility, so that's going to color what we talk about in the rest of the program. So with that, let's get to it.
10 Mil Club.
Going to go through our names alphabetically because that's what our members kind of like to see. ABM, we actually own ABM. We bought ABM this week. We saw ABM gap up here. We watched it while it settled, and then once it leapt above this area right here, we bought it. So far, we're up 2.43% on ABM. This is a year. ABM is a facility maintenance and infrastructure company, and all of these that we have. All of these that we have a good fundamental scan in one way or another. We could really dig into the weeds on these. That's not what this meeting is about. But ABM will have a solid fundamental scan. American Express, AXP, is now on the list. It's now above its 200-day moving average and moving up. And you're seeing this. I mean, you have things like Visa. Here's Visa. Here's MasterCard. So you have these financial companies that are very solid, that have share buybacks and low debt and a lot of clout. You're seeing those move upward, and a lot of that's because those are relatively defensive names in the financial services space. So American Express, we kind of liked because of the technicals that it had. And so we have it on the list. We do not follow a lot of $355 stocks here, but that one we kind of put on the list to see what we could do with it. AXSM, now we got stopped out of this past week. This is only on here because we got stopped out. It stopped us out on the way back down below its 50-day moving average, and so we are waiting for a new sign. We were not in AXSM very long. If I might pause here just for a second too. Everything we do, the buys, the sells, the stop outs, the victories and defeats, are all posted daily on our Facebook group and Facebook page. I will put those links below the video here once we post it. Also, if you would please consider giving us a like on this video. It helps us out a lot, and subscribe to our channel. We'd love to hear from you too if you want to post comments and let us know, especially if there's a stock you want to know about. We will be happy to look into that. We take suggestions as they come. As it is right now, we do a lot of rolling around the internet trying to find stocks to look at, and honestly, a lot of the things that people look at just really aren't very interesting. So anyway, got stopped out of AXSM. Was a little surprising because it looked like it was respecting its 21-day EMA, and it had the upward momentum and all of that, and then all of a sudden, blammo, and we just, I don't know, we'll have to wait and see what happens. Citigroup, we also got stopped out of this week, and that was a little bit of a surprise because it had been showing this upward momentum like this. I don't know, maybe what we should do. Now remember, a trend line is arbitrary, but this break here and then on options trading day, bullet like this, that was definitely a signal, because the next stop is the 200-day moving average, and that's way down at $116 a share. So we'll have to wait and see what Citigroup does. Church and Dwight is on here now. Personal note, if I might. Church and Dwight makes a bunch of different brands, including Arm & Hammer. I'm the guy who does the laundry here at our house, and it's just something we agreed on in our marriage early on. I think Arm & Hammer products and Church and Dwight products, are just fine. But their laundry detergent, I cannot see on the cap of the laundry detergent where the measurements are. And so I actually avoid buying Church and Dwight, like All or Tide. Those things will actually have a mark on the cap. I can see it. But Church and Dwight, their Arm & Hammer stuff, I can't see. But that doesn't change the fact that they currently have technicals that are inviting on the stock, and we have an alert set. Now we have it set way down here because, interestingly, the historical volatility. Now, another note: I have changed my historical volatility to a 10-day, as opposed to a right here. I've changed my historical volatility to a 10-day, as opposed to a 14-day like it came out of the box. And right now, that historical volatility is 26%, which is not particularly high. But if we have this stepwise pattern like this, we may as well wait for a really, really good opportunity to pick up Church and Dwight. So that one's on our list now. CDS we own. CDS is still headed up 5.31%. Nothing to see here other than the fact that we have a small victory going on. We're not at 10%, so we're not moving the stock yet. Donaldson, DCI, is in a very similar situation to Church and Dwight. Donaldson is a filtration and other industrial gas purifications, filtrations, ancillary components, stuff like that. So its technicals flipped back here, and so I have an alert set on it down here at, I believe, the minus 50% line. So given that, we will probably pick up some Donaldson if given the opportunity. Dollar General, still watching, is too high in the channel. We would need, I really need to do this like this and go, all right, let me know. And so now I have an alert on Dollar General, but Dollar General is too high in the channel at the moment for us to do anything with, but have it on the watch. Expedia, EXPE, has recently come back above its 50-day, back above its 200-day, and is currently following the top of the Keltner bands. You can see them I have here. It also has technicals that are indicating, like, if it migrates a little closer to this 21-day moving average and turns, we may be buying Expedia. Fastenal is another industrial company. You kind of have to back up a little bit. Let's go 2 years on Fastenal. Here they are, still going up. Good fundamental scan. We like the company. We like the stock. We would just need an entry that looks like something down here as opposed to something up here. So Fastenal, FAST, is on the list. Graco is new on the list, GGG. Now this is what Dave Keller would refer to as a bad chart. And Dave knows a lot more than I do. I get it. But the scan on Graco is a really good scan, and it recently came above both its 21-day moving average and its 50-day moving average. We're probably waiting a little longer to buy Graco, but there's a lot to like here. So GGG is now on our watch list. GILD, Gilead Life Sciences, we are waiting for an entry. So that one, a lot of the same kind of look, just waiting for an entry. We bought General Mills GIS this past week on a day that was very busy. If you've been paying attention on the Facebook page and group, there was a day where we bought a lot of stuff. And that was a really good day because things had turned right here. So we're up 3.57% on General Mills. Don't know what's going to happen. Remember, trend lines are arbitrary. Don't know what's going to happen here. That trend line is largely following the 200-day moving average. We'll see what happens when we hit resistance right around in there. But we'll say this, General Mills took its first quarter-over-quarter revenue increase in a long time right here at these earnings. So that gap up and then swing low and head back is kind of eye-opening. And so we bought General Mills GIS this week. We're up 3.57%. GSL, Global Ship Lease, we're up 4.39%. That was options expiration day. You can see from that if you look at the 6 months, it's not unheard of to have that big of a move with GSL, especially on the downside. So we didn't really panic. We're still up 4.39% on Global Ship Lease. Robinhood was probably one of the largest disappointments of the week. We bought Robinhood thinking, okay, it is back. We have this regression line here, and we were back on this side of the regression line. We had migrated back, so the 21-day moving average was actually in play. We bought it at 114, which is right, 114.90, which is right around in here. We thought, okay, all right, cool, we'll buy right in there. And then bad day, and then Friday, and we were out. It wasn't Friday, it was actually Thursday we were out, but I mean, now, I will say this, look, we were stopped out at 106.26. It's now at 99.96. So for what it's worth, we aren't as bad off as we could be. That's Robinhood. Now, the other one, I mean, AXSM Therapeutics, look, we got stopped out at 226. It's at 230. So that one, not so much. But Robinhood, we got stopped out and saved. HPQ, we are still in HPQ now. It is following the 21-day moving average. We bought it here. It's had a lurch and a return to the 21-day moving average, and then a lurch back up. And so far, we're up 2.48% on HPQ, and that works for us. IIIN, or N-Steel, is back on the list. And the reason is because the technicals kind of show it. We're now past earnings. Earnings seems to be really solid. We have sales beats. We have earnings beats. And with that, we are looking again at IIIN. Probably going to buy El Pollo Loco, LOCO, this week. That one has the upward movement that we're looking for, and you can see it begin to turn right here in this bottom quadrant of the regression channel. So Loco looks good to us. Medtronic still waiting for an entry point. This regression channel I redrew. Initially, when I was preparing the show here, that regression channel was flat, and then I redrew it, and now it points a little bit up. So a return, you can see my alert here, the return to down below this in this lower quarter, we will be looking at Medtronic. Waiting for NEXN to return closer to its 21-day moving average and then turn, and NEXN is absolutely on the buy block. OSG, okay, this was, I believe the company was called Ambac. It was an insurance company and financial services company. They sold a lot of the reinsurance and other financial services and became a pure play property and casualty insurance company just within the past year and a half. And so what you're seeing now is kind of a different company than there was in the past, but you're also seeing upward momentum and a turn right here at the 21-day moving average. So they renamed themselves Octave Specialty Group, but that one is one that we are looking at for a buy, probably earlier in the week rather than later. That's OSG. PCTY has a lot of the same. Paylocity, the technicals flipped back over this way, and now we have an RSI that is 66, pretty strong, and we're crossing the 21-day moving average. So PCTY. All right. PGNY, this is progeny. Now, I'm going to give a little bit more than 6 months to look at on this. All right. You can actually see some tags back over here. We unsuccessfully tried to trade PGNY, I don't know, 2 years ago or so. This company, okay, it's a human fertility company. They have a really good fundamental scan, like share decreases, increasing revenue, low debt. They just a lot to like in that company. What we couldn't figure out was why the stock never really went anywhere, why it would do this and then this and then this. And I think now with this breakout above this resistance level, I think now the market's figuring that out. We are down 1.24% from the price that we bought it just the other day, but we bought it. So here we are into PGNY now. Only looking at QLYS, QLYS, because we bought it. All right, I'm going to go to 6 months here. Because we bought it, wrote it to here, and then sold it. It's been consolidating in this level right here. You can see how the historical volatility rose up above about 65%. And we went, yeah, that's a little rich for our blood, and so we sold it. And this was very much a lesson for us. They teach in all of the portfolio management programs out there that what you're trying to do isn't just find returns, but you're trying to find risk-adjusted returns. And you can read about that subject endlessly, but basically what you do is you take the expected return and you divide it by the amount of risk, which is calculated in standard deviations. And what you want is more return or potential return for the units of risk that you take on. When we bought QLYS, it had good-looking fundamentals, as you can see down here, but the historical volatility was relatively low. It was more like 25 to 50%. It moves pretty quick, but 25 to 50%. And then we just kind of caught lightning in a bottle, and we just sold it straight into strength. And it was really probably our best trade of the quarter so far. SCHL, Scholastic, we bought that this week. Now, SCHL's probably the one with the fundamental scan that we like the least. I say like the least, that doesn't mean that it's a terrible looking fundamental scan or that it's anything to hate. But when you look at it, it has this upward momentum. Now, Scholastic, what this company does is they make a lot of children's books. They sell textbooks for school. They have a lot of learning products and things. They'll have a couple of quarters of revenue increases quarter over quarter, because remember it's going to be a seasonal type of business. But they'll have revenue increases quarter over quarter, and then they'll have one quarter where suddenly they just don't. They have a revenue decrease. So it's not the most solid fundamentals on earth, but it does have upward momentum, and it has for some time. And so we bought it at what looked like an advantageous point. We are down 0.61% from where we bought it 2 trading days ago. So nothing to be really concerned about as long as it respects this 21-day moving average, we'll be fine. And that was kind of what we were counting on. So, or what we went into it with the assumption. SCI, we continue to hold. We're up 6.31%. This is the stock that has the fundamental scan that I like the most, personally. If I could find more of these sold off like this, I would do this all day. So SCI, we continue to hold up 6.31%. TFSL. TFS Financial Corporation. This is an Ohio bank holding company. And banks in general have been going up lately, especially if they have really good fundamentals. Now, we got stopped out on Citigroup, and I still don't entirely know why. The claim is that in the earnings, the CEO commented that some of the macroeconomic stuff going on weighed on earnings a little bit. But I think he actually said a little bit, and that just killed the stock. And the next thing we knew, we were stopped out. And so it is with, with unsystematic risk that you take on by buying single stocks. But this had such good, smooth price movement that we went ahead and bought ourselves a piece of it, and we're up 2.44% on the few days that we're doing it. TMC, the metals company, we only have to cover because it's our mascot stock. Sorry, that's 2 years of it. Let's go with 1 year. It's our mascot stock because we are the 10 mil club and they are the metals company. And so people ask us about TMC. That's not a good chart. Don't buy that. Maybe it would be nice if there was one day that we actually did say, all right, everybody, it's time to buy TMC, the metals company, but today's not your day. Finally, TREX, you know about the plastic lumber company, TREX. Well, here they are. Hitting the line up. They might come back to the line again. Remember, this downtrend is arbitrary, but they actually have a very good looking scan fundamentally. I mean, they look really, really good. That's what we're riding with this week. Now, you'll notice on our Facebook page, if you follow along with us, please give us a like, please follow us, please join our group. If you follow our Facebook page or group, you'll notice that stocks appear that simply aren't on our weekend portfolio. That's because things come up and we notice them, and we're not afraid to take the plunge. And then there are things that appear and then disappear off of our portfolio meeting. So we try to keep this just as quick hit as possible. And, you know, would love your comments, would love to hear anything you want to say. And if you would like to comment and ask us about a stock, maybe we'll do a deep dive on it. And so that is the way we see it from all of us at the 10 Mil Club production room and our singers, Sophie Hannah and Presley and Jackson, our announcer. We will see you next time on the
10